What's up everybody? GenExDividendInvestor here. In this video I'm going to reveal the top 3 dividend stocks to hold for life if you couldn't have anything else in your portfolio. This top 3 comes from a poll I just ran on the world's largest dividend Discord investing chat server, which now has almost 4,300 members on it, and it's free to join, so check out the link to the description of it in this video. Then I'm going to tell you another amazing rags to riches investing story, and finally I'll end this video with a response to a subscriber who is at a crappy job they hate without enough money to invest much. And as is my normal disclaimer, just consider this entertainment, not financial advice. So the third most popular stock in the poll, if you had to make a portfolio of only 3 dividend stocks to hold forever, was one I own, Pepsi Co, with 26% of voters picking it. Pepsi is an amazing food and beverages company that owns or has some promotional rights for a ton of brands I love, including Doritos, Cheetos, Ruffles, Mountain Dew, and others. Let's take a look at some dividend metrics we care about. We see that Pepsi has a nice yield at 3.01%, a payout ratio at 76%, a nice 5-year dividend CAGR at 8.4%, and an awesome 48 years of dividend growth. Let's see how their year-over-year stock prices look. Their stock is about $135 a share, which is below their 52-week high of $147 and above their 52-week low of $101. We see their PE is high at almost 28. Let's look at their total returns. We see that over the last 25 years, Pepsi's 10.08% annualized return has beaten the S&P 500, which has done an impressive 9.26% annualized. Let's see how their stock trend line looks. So a visual glance tells us that we like the slope. Let's take a look at their dividend payouts. So a nice, consistently increasing trend. How does their dividend yield look over time? So this shows their yield has been slightly going up over time, so when I look at yield in isolation, it tells me that Pepsi may be becoming more compelling as time goes on. Let's look at their EPS. So we see a very gradual trend up, and sloping is what we want. How about their shares outstanding? We see the kind of trend we want to see in shares outstanding, which is a line declining like this, which tells us that Pepsi is buying back their shares and thus giving more value to shareholders. Let's check out their assets to their liabilities. So this looks okay here, with assets growing approximately the same rate as liabilities, though ideally I'd like to see a faster asset growth. Let's see how their revenue growth has been. So we see a slight increasing revenue trend over time, though I'd like to see more. Let's check out their net income trends. So like revenue, we see a slowly increasing trend of earnings with a small spike that gets washed out in the noise. Let's check out their price to free cash flow ratio trends. I get this data from the net. Here we see that Pepsi's price to free cash flow ratio has been growing, so becoming less compelling when we look at this metric in isolation. Let's look at their debt trends. Pepsi's been taking on more debt, but their most recent levels look more promising. Hopefully they'll keep driving it down. Let's move on to the number 2 most popular dividend stock to hold in a portfolio if you could only hold 3 for life, and that's another I own, and Microsoft at 46% of the vote. Microsoft is in tech, which I'm bullish on from a macro perspective, and they have amazing products with incredible runways of growth potential. Their cloud offering Azure is entrenched at number 2 in the world. Their Xbox gaming is huge and growing. And the beauty of Microsoft is that it's both a dividend play and a growth play, something that is almost impossible to find, which makes it an awesome candidate for a forever portfolio. Let's take a look at some of their dividend metrics. We see they have a weak yield at 0.98%, an amazing payout ratio at 32%, a great 5-year dividend CAGR at 10.5%, and a solid 16 years of dividend growth. I would put down a pretty penny that Microsoft will become an aristocrat someday. Let's see how their year-over-year stock prices look. Their stock is about $203 a share, which is below their 52-week high of $217 and above their 52-week low of $132. We see their PE is high at 35. Let's look at their total returns. And this helps show why people love it so much. Not only is it a dividend play which is growing strong and should continue to flourish, but they also have enjoyed incredible total growth returns. Over the last 25 years, they've approximately doubled the annualized return of the S&P 500, which is equivalent to saying they've beaten it by a factor of 6. Insane. Let's see how their stock trend line looks. So a quick check shows Microsoft has a nice stock price slope over time. Let's take a look at their dividend payouts. So a nice, consistently increasing trend. How does their dividend yield look over time? So unlike Pepsi, which is slowly becoming more interesting over time, Microsoft is looking less compelling to take a new position in, but you are happy if you're an existing shareholder. Let's look at their EPS. So we've seen incredible EPS growth for Microsoft, which helps explain why shareholders love it. Let's check out their shares outstanding. So we see a steeper positive trend for Microsoft where they're driving value back to their shareholders by doing deep buybacks. I hope that continues. Let's check out their assets to their liabilities. Once again, we see a stronger set of trends where Microsoft assets are growing faster than their liabilities. Awesome. Let's see how their revenue growth has been. So an even stronger revenue trend for Microsoft. Excellent. How about net income? So we see a powerful trend line for Microsoft, increasing at a faster clip than Pepsi. Let's check out their price to free cash flow ratio trends. Watch my previous videos to learn more about price to cash flow ratios. So much like Pepsi's price to free cash flow ratio, Microsoft has been growing quickly, becoming less compelling for becoming a new shareholder, but as an existing shareholder you are enjoying higher prices and the optionality that stock price gives you. Let's look at their debt trends. So Microsoft has taken on some debt, but they have what I believe is the most cash on hand of any company in the world, with almost $150 billion in cash and reserves. Think about that. And then after them is Berkshire Hathaway, then Alphabet, and then Apple. So that's another reason why they're an amazing company to hold. They are a relatively asset-light business with the world's largest surplus of cash. Freaking-credible. Okay, let's move on. Now, I personally thought we would see McDonald's in the top 3, as it is one of the most recession-proof stocks in the world, making it one I want in my top 5 for sure, potentially my top 3, but it didn't make it. I also thought maybe we would see AT&T, given their large solid yield combined with new management direction that is finally well aligned to shareholder interests, but nope. And then finally I thought maybe it would be Apple, who got 20% of the vote. No, the number one stock with 49% of the vote is none other than, of course, Johnson & Johnson. Let's take a look at some of their delicious dividend metrics we care about. We see they have a dividend yield of 2.73%, a sweet payout ratio at 51%, a nice 5-year dividend CAGR at 6.3%, and an incredible 57 years of dividend growth. How's their stock been doing in the last 12 months? They are at about $147 a share, which is below their 52-week high of $157 and above their 52-week low of $109. We see their PE is high at almost 26. Let's look at their total returns. We see that over the last 25 years, J&J's 11.4% annualized return has beaten the S&P 500's 9.26%. Excellent. Let's see how their stock trend line looks. So a quick review tells us that J&J has a great stock trend line. Let's take a look at their dividend payouts. So we have a solid and consistent payout for J&J as we would expect. How about their dividend yield trend? So this shows their yield trend has been slightly going down, so J&J has not become more compelling over time, purely from this metric. Let's check out their EPS trends. J&J has a minor trend up, the least aggressive of the 3. How about their shares outstanding? So a very gradual improved trend for Johnson & Johnson. I'd like them to amp this up a bit. Let's see how their assets are trending compared to their liabilities. So similar to Microsoft, we see that J&J's assets are growing faster than their liabilities, which is what we want to see in a long-term investment. Let's see how their revenue growth holds up as compared to these other lifer dividend stocks. So as we would expect from a dividend powerhouse, we see that J&J has nice increasing growth in their revenues over time. Let's check out their net income. So we see a very gradual increase in net income, but nowhere near something like Microsoft. Not surprising how long J&J has been in existence. Let's check out their price to free cash flow ratio trends. So here we see Johnson & Johnson's price to free cash flow ratio has been growing, so becoming less compelling if you're thinking of starting a new position when we look at this metric in isolation. But as a shareholder, you love the stock going up. Let's look at their debt trends. So J&J has been taking on debt, but at a reduced clip, which is preferable. So there you have it, the top 3 dividend stocks people would hold for life if they couldn't hold anything else. Now I'm going to tell you about the mind-blowing story of Grace Groener. She was born in a farming community in the early 1900s, and unfortunately both of her parents died when she was young. Early on, Grace was a frugal person. She wore used clothing, never buying new. She lived in a 1-bedroom house. She walked or took public transportation everywhere rather than spend money on a car. Her first and only job was at Abbott Laboratories, where she worked as a secretary for over 4 decades. And shortly after she joined Abbott, a single simple decision drastically changed her financial future. She bought 3 shares of Abbott stock for a total of $180, and over the rest of her life she kept reinvesting the dividends. And as she kept reinvesting, the Abbott stock kept splitting. In fact, it split an astounding 10 times. When she died, that $180 investment she had made in 1935 was worth $7 million. So what can we learn from that story? Number 1, to live frugally. Number 2, to buy and hold quality and don't sell. And number 3, invest, have patience, and play for decades, not days. Sometimes I see new investors on my Discord get irked when a stock they own falls 1% or 2 in a day. I recommend not focusing on daily market gyrations. If you did your research and you bought into a quality company, then just sit back and let the workers in your company do their job and pay you a portion of their profits. If there is a fundamental change that impacts you, then it might make sense to reassess things more carefully. But otherwise, don't worry so much about minor day-to-day movements. Again, play for decades, not days. Okay, now I want to respond to a subscriber who reached out to me and told me that they were worried that they didn't have a career and they didn't even have any useful skills. They didn't have a degree and they were still living at home at a dead-end job they hated, and they were only able to invest a little bit. First, I want to say that it's absolutely awesome that you are investing, even if it only feels like a little bit. Listen to the story I just told you. She only invested $180. Is the kind of return she experienced normal? No. But if you are investing anything, that means you're already ahead of the majority of people out there that don't invest. Be proud of that. Don't ever think you don't have skills. What I will grant you is that you probably haven't reflected enough to articulate what your skills are, and maybe you don't recognize your skills. But you have skills. You have greatness in you, but you're going to need to dig deep to find them. I want you to write down your passions, what you love doing. Do you love playing Madden football? Are you a great conversationalist? Do you have incredible empathy for others? If you don't love what you're doing, then I want you to start thinking how you could do something around your biggest passion. This doesn't have to be something you are good at, just something you love or love doing. Let's say you love watching Netflix. Awesome. Start a blog about your favorite Netflix shows. Consider starting a podcast where you do a review after each Netflix movie you watch. Maybe start a YouTube channel around your reviews. Don't worry if you think you aren't creative or that you don't like your voice or whatever. Those are just fears and insecurities trying to stop you. Don't do this for money, do it because you love watching Netflix. Turn that waste of time into something productive. I didn't know anything about YouTube when I started my channel. I'd never edited a video before. I didn't know anything about social media. Now I've been doing this for a year and I totally love it. You're going to learn a ton of new skills and you'll be spending your time in a productive way tied to your passion. It might not be obvious where you're going, and that's okay, you don't need to know. Don't let analysis paralysis stop you. By that I mean don't spend months planning your first content you release, whether it's a simple website or a podcast or a video. Instead, just do it. Start today. You don't need to know where it's going to go. Don't let the pursuit of perfection stop you, just keep moving forward. Remember what C.S. Lewis said, you are never too old to set another goal or dream a new dream. Thank you so much for watching all the way to the end. I'd really appreciate it if you'd leave a like on this video. And don't forget to check out my Dividend Discord server. One of the best pieces of advice I ever got was that you will become the people you surround yourself with. My Discord is an opportunity for you to surround yourself with investors. Thanks, and I'll talk to you again real soon. I am not a financial advisor, and these videos are for entertainment, inspiration, and educational purposes only. Investing of any kind involves risk. I am only sharing my opinion with no guarantee of gains or losses on investments.